Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus will be on the earnings of Asian Paints. The company has reported a consolidated net profit of 1,275 odd crore rupees for the March quarter. This is a rise of about 1.3% from the year ago, same period. And also the total revenue of the company has today 8,730 crores. That's down by 0.6% on a year-on-year basis. The revenue and the profits have, however, missed the street estimates. Even on the EBITDA figure, when we see it's coming at 1692 crore rupees and it's down by 9.3%, and the margins have also declined by 170 basis points to 21.1%. To decode for us what has gone into the earnings this quarter and what's the outlook going forward, I'm now joined by the top management of the company. Mr. Amit Syngle joins in. He's the Managing Director and the CEO of Asian Paints. Warm welcome to you, sir, on Business Today Television, and great to have you with us. First up, if you could detail for our viewers, why is there a miss on this, street estimates on most of the accounts that you've reported in this quarter, and how have you yourself assessed this quarterly earnings, sir?
So overall, when we look at the quarter, I think we delivered well on the volume growth. We delivered a double-digit volume growth, which kind of came in. The value was lower because of two factors. One, we had taken a price decrease of almost close to about 3.7%, which kind of impacted the value growth. And also in terms of the fact that the product mix was not as we had intended for the quarter to that extent, which has kind of taken a little bit of this toll on the overall value in terms of what we have delivered for the quarter. As we see it, the margins have also come down a little bit, both sequentially as compared to even last year to that extent. But I think on the whole, what we see is that if you look at the overall financial year, I think the PBDIT margins are up on last year. Overall, the PAT growths are very, very strong in terms of what we have delivered. So I think the quarter is a bit of an aberration in terms of what we are seeing overall to that extent. I think the parameters on an yearly frame, if you look at the growths are also strong from a volume point of view. The value growths are about closer to about 3%. So I think on a yearly basis, the numbers have been pretty good. The quarter is something which is a little bit slow, but I think the volume growth being higher and double digit is the bright spot in terms of what we are seeing in the quarter.
Okay, so you did mention price cuts of 3.7%, but cumulatively in FY24, what's the kind of price cut you've taken and what's the outlook going forward? Do you think the price cuts could continue going forward too?
So overall, I think for the year, the price cuts are around in that range in terms of what I spoke. As we kind of go ahead, quarter one actually looks benign from a point of view of any raw material inflation. While we have seen some jumps in terms of the crude prices, the other raw materials have kind of remained under control to that extent. So we don't see any price disruptions, either increases or decreases happening in quarter one as we kind of go ahead to that extent. We will have to watch out for quarter two and quarter three in terms of how the geopolitical situations kind of pan out and what is the impact on crude prices. And therefore, we'll take a call at that point of time. But for the immediate, we don't see any kind of disruptions happening in the price front.
Okay, so about the demand trends vis-a-vis this current quarter, how do you see things improving in Q1 and Q2? Trends in rural as well as the urban space?
So as we see it in terms of the demand conditions, even in the quarter which has been gone by, which is Q4, what we saw was definitely the rural growths kind of coming up to that extent and trying a little bit lower than the urban growths to that extent, which is a very, very positive sign. We also saw good growths happening in the B2B institutional segment, which is there, and also something which is coming from the industrial sales growth. So I think some of those trends would continue into quarter one in terms of what being there, and we see even the rural markets bringing back a little bit more in terms of as it happens. However, there is elections, there is heat wave, and there is all those things which are kind of going in the market. So we still expect that the demand conditions would be still moderate, but we are kind of aiming for a double-digit volume growth for quarter one as we kind of go ahead, and that's how we are intending in terms of that growth would be, I think, pretty okay in terms of as we see in this quarter as well.
Okay, so double-digit volume growth you're maintaining for Q1. It's coming at 10% for Q4. If you could split it up monthly for us to get an understanding of how things could pan out as well.
In terms of Q4, if we look at, I think the months of January and February were, good in terms of what we could kind of really get in terms of the volume growth. I think the volume growths across the 3 months have been pretty uniform in terms of what we have seen to that extent. As I said, I think some impact coming in elections in the month of March to that extent, which is there. But on the whole, I think the exit month was a little bit slower, as we could see because of the impact coming because of elections, and now the impact in terms of a little bit of the heat wave, which we are able to see. But I feel that some of these conditions would kind of really remain same, and I see some resurgence from the rural B2B and the industrial segment happening in this quarter, which is the current quarter of Q1 of 24-25.
Okay, so sir, exiting FY25, how are you looking at the volume growth?
We are still maintaining that for the current year, we should kind of really aim for a double-digit volume growth for the year. And that is something which possibly would be led by all areas of decorative B2B as well as industrial sales.
Okay, so on the margins now, EBITDA margins have also slightly dipped. You've been comfortable, although with a band of say 18 to 20, 21% odd. Would you be looking at that band itself, or would you have levers to revise it upwards, especially looking after once the election phase is over, when we're looking at say Q3 and Q4?
So overall, we are maintaining the same band in terms of the 18 to 20%, which we have done. As I said, we have ended the year at almost about 21.6% kind of PBDIT margin, which is up from the levels of 18.2% last year to that extent. As we go ahead, we are maintaining the same band, and we would like to possibly stick to closer to what we have achieved by the end of this year.
Okay, so could you also detail for us, since you said that the product mix did not go as per your expectations in Q4, how are you likely to really have things pan out in FY25 in terms of the segmental revenues?
See, as we go ahead, I think what is very clear is that post the elections, we are looking at a strong kind of resurgence from the market, and therefore we expect was Q2 and Q3 to be definitely quite good. The festival season currently seems good with a decent Diwali period in terms of what we see ahead. The monsoon's prediction has also been pretty decent, which kind of really maintains the positive sentiment at the for the rural demand in terms of going forward to that extent. The auto companies are building in fairly substantial builds and so on and so forth, which kind of indicate that the auto sales should kind of remain in the reckoning in terms of going ahead. We see a lot of investment in companies happening in newer factories, factory extensions, and so on and so forth. So therefore, we feel the entire B2B market in terms of from the point of view of government infrastructure, factories, institutions should be good. And I think on the construction front also, we feel that the middle to luxury segment seems to be kind of doing well, and that something should kind of continue. So on the whole, I think these are the positive factors which we see, which should kind of keep the demand up in terms of the coming year.
Okay, so on the international business front, how did it perform in Q4, and what could be the outlook for FY25 there?
So when you look at the global performance overall, this year, Asia was a little bit of a disappointment, with Nepal not doing as well as in terms of what we wanted, although Sri Lanka did quite well and is up from the blues, which we saw in last 2 years to that extent. Net of Asia, if you see, the markets have done well, whether it is the Middle East markets or the African markets to that extent, which is there. And we see that the trend would kind of continue in terms of, the other markets outside Asia doing well. We feel Lanka and Bangladesh also should do well. Not too many hopes on Nepal as of now in terms of how it kind of really fights back and comes back to that extent. A little bit of a concern is on the currency depreciation in terms of what is taking place both in Bangladesh and Egypt to that extent. But I think on the whole, the demand outside Nepal should be, I think, good in terms of the coming year.
Okay, understood, sir. Also, if you could detail for us, how are you looking at your Capex plans, and maybe increasing your distribution points? Where is it at currently, and how do you see it panning out for FY25?
We have announced almost a capex of 8,700 crores about 1.5 years back, and this entails a new greenfield facility which is coming in Madhya Pradesh, where we are putting a 4 lakh KL, plant, which would be globally one of the biggest plants in terms of what's coming in. It should kind of get completed in the year 2028. Apart from that, we have put a lot of brownfield measures in terms of increasing the capacity of currently about 17 lakh KL to about 22 lakh KL. And all these capacities, we have kind of done our expansions in our Khandala and the Kasna plants which are there. And now what is underway is the plant in Gujarat and the plant in Karnataka. This should happen in the current year as well to that extent. And I think those capex plans are going well. The capex plan in terms of the backward integration are also doing well. The white cement kind of foray in Fujairah, Dubai is online, and you should see early next year in terms of the plant getting commissioned. To that extent, the VAM-VAE plant also is going on time, on schedule in terms of what we have put in, and we should see in the financial year 26, we should have the facility and the capacity kind of coming up for us. So in all, I would say that this overall capex, which we have announced of 8,700 crores, seems to be on track in terms of what we have put, both from the point of view of capacity enhancement and the backward integration measures we have taken.
Understood, sir. Sir, also, since I've been reading some brokerage houses reports that have come in after the earnings, most of the brokerage houses are again and again pointing out to the higher competition that could pan out as a concern for the company. They do believe that the overall industry could see a shift in market share and the cost structures as well. I have discussed with you over the last many quarters, and you've constantly maintained that this will not disturb your current leadership as far as market share is concerned. But why do you think are the brokerage houses not able to come about? And now when they see price cuts happening, they are actually alluding it to the fact that this is happening to maintain the market share and to have deal with the competition at this point in time. What would you say, sir?
I think there are some, information which is getting misconstrued by the outset community, because what we see very clearly, 1.5 years back, we had taken almost price increases of about 25% in terms of the market. We have not even kind of looked at reducing prices to that extent in terms of what was the increases taken. And as I said, that we have taken just a decrease of about 3.6%, and that was taken more from a point of view of saying that we were looking at very high overall gross margins coming up, and overall margins were also pretty strong in terms of what is there. We wanted to give the right value for money price across segments to the consumer, and we wanted to kind of really invigorate demand to that extent. And it was not because of any competitive factor that we had looked at in terms of looking at any decreases. And these were the decreases which were done even before competition, the new competition really put up their price structures in the market to that extent. So I don't think so that there are any price decreases which are happening because in anticipation of any new competition or any other thing which is happening in the market. In fact, what we have seen in the past, that competition has always been there in the market. We have had very strong multinationals who have come in the market and looked at in terms of doing their foray to that extent. In general, what we have seen, competition does keep their prices 10 to 15% lower than our pricing to that extent. And I think that's a normal phenomena which happens in any market where there is a leader who's kind of really looking at premium pricing to that extent. And as we kind of go ahead, we don't think so that, there would be too many large changes in terms of the market structure which can take place overall in terms of the shares. As an organization, what we are very clear is that we are looking at newer revenues, newer areas, so that we can expand the overall paint market, increase the pie, so that there is space for everyone in terms of going forward. We are also looking at activating our advertising, marketing spends, looking at new brand ambassadors coming, looking at new areas, so that we are able to kind of give a fillip to the brand equity, look at the mind share in terms of the consumer. At the same time, give a lot of imperatives around the supply chain innovation in terms of what we are putting in the market. So I think we are clear in terms of a strategy. We don't think so that going forward, there would be any disruptions. But that is something which for the external world only time would tell.
Okay, so you've also mentioned the company's aim of reaching 1 lakh crore rupees revenue mark over the next decade, and you're now alluding to, you want to expand to newer areas, newer forays as well. If you could just give us a glimpse as to how will Asian Paints really pan out over the next 10 years, just a slight glimpse for all those fresh entrants in the investors community. Of course, we've had a stellar past, in terms of the stock market performance of Asian Paints, the kind of fundamental performance that year on year you've displayed on the earnings as well. For anyone looking at Asian Paints from the next decade's perspective, a fresh investor, first time investor, how would you really explain to them what is going to be coming forward?
So I think if we look at, first of all, I think some of the positives which are coming is the brand India. Today we look at definitely India as a market which is very, very strong. It is kind of really showing its muscle with respect to the overall GDP growth which are being projected for the next 2-3 years. We are talking of being the number 3 economy in the world by 2027 in terms of going forward. And I'm sure as the overall kind of indices kind of indicate, there is a lot of industrial activity. There's a lot of technology which is coming into India to that extent. And I think the foreign investments in terms of the overall brand India is kind of only going up to that extent. The second area is the consumption story is very, very much alive. We have taken now crossed China in terms of the overall population to that extent. I think the housing sector would kind of really boom in terms of from the point of view of people looking at their own houses coming strongly. The second house market is also kind of booming up in terms of the luxury segment coming up strongly. I think the disposable incomes are much, much higher in terms of what we see overall. And there is a general trend to kind of really upgrade in terms of really better and smart options in terms of what is going on. Given all this, what we see is that, the paint market would kind of really continuously grow. We are definitely seeing that the demand conditions would kind of really augur for definitely something like a 10 to 12% kind of a growth happening in the industry over the next 4-5 years, definitely in terms of what we see. And given this kind of a zone, we feel that the market leader would definitely get the advantage in terms of taking a larger share of this growth which is going to happen in the market. And that is what we are pegging in terms of going forward, that as we look at today crossing almost about 35,000 crores, we are looking at in terms of really galvanizing sales at the rate of almost about 10 to 15% going ahead in the future years. And that is the direction which we give, which would be pegged at profitable growth which we can make. And especially I think segments at premium and luxury level is something which we are focusing a lot of thought on. The whole area of home decor is a very big area for us in terms of what we are doing, because we think that the customer decor life cycle is something which we want to kind of really be a part of. And as we kind of go ahead, I think the whole area of homemaking would still remain very, very emotional. And we feel that the whole area of Har Ghar Kuch Kehta Hai would still be very, very relevant for the next 10 years as we see it.
All right, sir. Thank you so much for sharing with us this insight as to how do you see the company's vision going forward from here, and detailing for us the company's earnings as well as how the company manages or is looking at the increasing competition at this point in time. Always a pleasure to host you, sir, on Business Today, and seeking all these insights is always helpful for all our viewers and various investors who watch you through our platform. All the very best to you for the upcoming quarter, sir. Truly appreciate your time with us.
Yeah, thank you for inviting me on the channel. Thank you so much.
Thank you so much, sir. With that, viewers, we wrap up this very special conversation with Mr. Amit Syngle, the MD and the CEO of Asian Paints, on the company's earnings and the outlook going forward. I'm sure this has given you enough and more insight as to how the company could be looking at, avenues for growth, opportunities, challenges going forward from here. Do stay tuned on to Business Today in case you want to listen into top-notch managements from the companies that have been reporting earnings, so that you can get a better understanding of the stocks that are listed, stocks that you need to keep on your radar, and maybe you may be holding in your portfolio as well. Until then, many thanks for tuning in.